As we kind of wrap up 2022 and look forward towards 2023, let's look at the 10 key stocks for the stock market in 2023. Some of these are going to be huge gainers in 2023, and honestly, some of these stocks are going to be huge losers in 2023, unfortunately. And guess what? There's probably going to be a lot of controversy with my picks and what I've got to say, but hey, I got to give you guys an honest take, and to me, these are the 10 key stocks that I'm looking at for the next year. So go ahead and hit that like button and make sure you're subscribed to the channel, as it says 35% of you guys aren't subscribed, and hey, what's the worst case scenario? It's free to do, and then if I screw up some of these, you'll know when my videos pop and you can jump in the comments and make fun of me for it. Sounds like a good time to me. I don't know about you guys, but hey, I'm willing to take it if you guys are willing to click it. And if you want to see all my buys and sells in real time on a lot of these stocks this year that we're going to talk about, make sure you check out the pinned comment down there, as the holiday sale is ending this weekend for the Market Insiders private group. And remember, you get 5 courses for free, all the Discord chats, you get everything, videos from me all the time. We go live all the time on Q&As. Basically, you get access to me 24/7. So make sure you check that out and don't miss out on that if you're interested. So the first stock also happens to be my favorite stock, and that would be Apple. Now, I got to be honest with you guys, despite Apple being my most favorite stock ever in the stock market and also having made me the most money ever in the stock market, this year, 2023, I think is going to be very, very rough for Apple. I can't lie, guys. The whole rest of the market is basically cratered down, but there's Apple kind of holding strong, and unfortunately, it's holding strong in overvalued if I could talk. It's holding strong in overvalued territory. It's not like it's fair value, although we're getting close to fair value here, but it's still overvalued. In order for this crash to kind of work its way through, we need to see Apple basically fall into that undervalued territory. Now, I'm not sure that I agree with all the bears out there, all the folks that are saying, Apple's going to be, down to 70 or 60 or whatever. Hey, it's possible, I guess. Anything's possible in this sort of market. And if it does, don't get me wrong, I'll be selling grandma, even though I don't have a grandma to buy Apple. But I don't think it's going to fall down there. But do I think it's absolutely falling from its current levels, and probably significantly? Yeah, I really think that it does. So although it hurts and it sucks for me to say it, I have to admit it that basically Apple is going to be a big loser next year. So on to stock number 2, and that would be Palantir. Now this one I don't think falls in the same category as Apple. Now it doesn't mean it can't fall further, but I think you're going to see a lot more volatility in Palantir than you will see in Apple. But I think as the year goes on, as they continue to execute, and as the market basically starts to look for companies that have free cash flow in the first place, and as they start to try to take on more risk, I think towards the end of 2023 into, basically going into 2024, companies like Palantir are in a prime position to really pick up a lot of those investors looking for that sort of investment. So although I don't think it's going to the moon and it's not going to $40 or anything crazy like that, who knows what all is going to get put out there. However, it would not surprise me at all if we have a very nice gain in Palantir at the end of the year next year. So I've been buying it all during this downturn, and I'm going to continue to buy it as long as Wall Street wants to beat it down, basically through the end of this year and at the beginning of next year as well. But for stock number 3, let's talk about all the old man stocks that have PE ratios of basically 20, 25 or above. That's just crazy for those type stocks. They are basically the last bastion of stocks that are just honestly overvalued, and I don't know how they've stayed overvalued this entire time. But my gosh, they're running at some of the richest valuations that they've ever run at, basically since they were a growth company, in some cases 40 or 50 years ago. That's how rich they're trading. Now, that doesn't mean they're just going to crash down to the floor. That's not the way they move, right? They don't go up like growth stocks do. They also don't crash down like growth stocks do. But those PE ratios will eventually return back to fair value. And unfortunately, I think next year is the year that it's actually going to happen. Now for me, my plan is I'm looking to add some dividend stocks into kind of my last pillar of income that I kind of want to start up there. I have some dividend stocks in there, don't get me wrong, but I want to beef that up stronger. So that will mean I may start buying those as those opportunities start to come. But I absolutely think those are going to have a rough year coming into 2023. So I'm definitely eyeballing a few of those to buy. And the fourth stock we'll take a look at is PayPal. Now look, I know they kicked up a ton of controversy earlier on this year, but if you actually listen to their earnings call, the impact from that gaffe honestly wasn't that bad, and they see growth coming into next year. Not that it's going to be crazy, not that it's going to be anything else, but right now it is trading really, really cheap from a valuation perspective, which means as they perform, if they perform, and as the market kind of starts to kind of get over itself and just not stop being ridiculous, I think a stock like PayPal is going to go on a very nice run. It's going to return very well next year. Now, do I think it's going back to its all-time high? No, absolutely not. It's not going to rocket up like that at all. But at the same point, right now, we're basically in the 60s. Could I see it getting up into the, basically breaking up into the hundreds? I definitely think that's a possibility if they execute. And if we don't have like basically a terrible recession, if we have a mild recession that, the Fed is basically thinking and hoping that's what they actually end up getting. But I'm not going to be disappointed if it goes basically from 60 to 80 because that's still a 30+% gain in a year, and that's an incredible return on a stock. So stock number 5 would be Amazon. And I'll be honest with you, I have no freaking clue what Amazon's going to do. Right now, it is just basically trading in madness. It just basically depends on, do you believe the long-term story with Amazon or not? Because right now, it's basically given, I don't know, I think it's 2018, 2019. Anyways, you're basically getting it as cheap as it was way back then. But you can't tell me, despite the illness run up and come back down, that even today, it's still not a far superior company to what it was back then. But back then, AWS was nothing. Now it's one of the main revenue drivers and is definitely the most profitable thing that they do. And to me, I'm just kind of looking at next year and into future years. Are people going to buy more or less stuff from Amazon? I personally think it's going to be more. And so I just don't understand what the heck Wall Street's doing. But I'll be honest with you, with Amazon, it's always traded kind of funny. It's always had a very rich valuation. And then it's always just had these times where it'll run for a year or two. And then it basically plateaus out for, basically a year or two before going on its next run up. It's just kind of how it trades. So I honestly don't know if we're going to get another, this was a down year, but are we going to get a flat year next year and then a run after that? Or is it going to be, basically we're going to get a run towards the end of the year? I'm not real sure, but I'm definitely very happy to add this stock in the 80s as long as Wall Street wants to keep it there. So number 6 would be all the MJ plays that are out there. Guys, you choose it, you pick it, doesn't matter to me. My take on all that is they are basically dead money until it gets federally legalized. I know I was thinking the same exact thing. Hey, with the way the election results went in 2020, we're going to basically get federal legalization, especially with some of the other states coming around to it that traditionally weren't coming around to it in the first place. Everybody's kind of basically saying, hey, there's a lot of tax revenue we can gain from this. And every single state has issues with revenue, tax revenue specifically, and especially coming into a down market or a down, basically a recessionary time frame or just basically the economy sputtering a little bit. If you're coming into that sort of, environment, your tax bill is going to not be as good as you want as a state. So a lot of those states have come around to legalizing it in order to kind of fill in those gaps. So I do think it happens, but until it happens at the federal level, it's basically going to be dead money, guys. I'm sorry. I love the stocks. There's a lot of great stocks out there in that space, but until that gets federally legalized, they're just basically stuck in purgatory. Number 7 is Google, and you guys know that I love Google, and honestly, there may not be a better deal in the stock market right now than Google because Wall Street beating it down to its lowest valuation ever makes absolutely no sense. I don't care that our revenue is going to slow next year. It's not going to zero, so I don't know why they're beating Google down as if it's going to zero already. I honestly think Google could be one of the best gainers next year in the stock market overall. Now, of course, there's always going to be some penny stock or some other ridiculous small cap prey that, basically goes up a lot higher. But in terms of the big stocks that we all know and love, I think it may very well be one of the ones that return best. But the next stock I actually think is going to return better. And it honestly is probably the most controversial take that I'm going to have on this entire thing. And that stock would be Meta. And I know, guys, I hear you already. I know all the bull and the bear cases and everything else around it. But the reality is, look at its run up since it got down into the 80s. It's had a huge run up. Now, I know it's going to come back down along with everything else. But from those lows, it's really run up because it was trading at like a 7 or 8 PE or something like that. Just ridiculous. They still print money. And I think Zuckerberg got the message finally that, hey, you can pursue this metaverse thing, but you can't be like Mad Men all in. I'm going to burn the whole company to the ground trying to get there. Go play your thing, but you also need to operate and make sure your other, basically pieces of the business are profitable. And they are just now starting to monetize, WhatsApp and Instagram Reels and some other things like that I think are going to generate huge revenue next year that wasn't really generating revenue this year. Now, I know ads are going to come down and the ad spending is going to come down. But again, those are new lines of revenue coming in that are going to add directly to the bottom line that you don't really have a comparison to in past years. Or if you do have a comparison, it's very small considering how much they're going to expand all that this year. So when I look at Meta, it could potentially be the best gainer in all the stock market next year. And I'm really glad that I added a whole bunch of it almost this entire year. I'll be honest with you, when it took its first dive, I bought some and then it just kind of kept getting worse. So then I kept buying more of it because it just made absolutely no sense. So yeah, I mean, you can be a little bit mad at me, I'm sorry, but I think Meta even beats out Google in terms of returns this next year. But of course, I'll be happy either way since I own both of them. So, in one way, if I'm wrong, I still win because it would mean I was right on the other one. And number 9 would be housing related stocks. And again, guys, as a real estate investor for over 20 years, I got to tell you, I wouldn't touch anything in basically the housing sector in regards to stocks. That doesn't mean somebody can't perform, doesn't mean there's going to be an outlier there. But due to the Fed basically telling you there's going to be a lot of pain in the real estate market for the next year or two, that kind of signals to you right there that, hey, there's gonna be problems over there, and they're intentionally doing it because they're telegraphing it ahead of time. But yet the stocks are basically acting like, hey, nobody's gonna do that. That's not gonna happen. Hey, real estate's gonna be just fine. It always goes up, right? And that's the problem right there, is when you listen to that narrative and you hear that and you see how the stocks are actually trading, what you're not understanding is Wall Street is trading that stock right now, meaning that they know the numbers are going to be strong this year, or we're going to be strong this year coming into this year because of all the builds that were already out there and all the, basically the momentum of the real estate market itself. It's like a giant Titanic, it turns really, really slow. It's not a fast moving thing like a lot of other stocks are and such. And they plan on dumping it the moment that there's weakness in the actual market, when it starts showing up in that data basically next year. So if you're buying the narrative that's being put out there with all the housing folks and all the folks going on CNBC and all the rest, unfortunately, you're buying a trading narrative and you're being set up to be holding those bags whenever this thing turns. And when it turns, it's going to get ugly, and it's going to get ugly really, really fast. Now, not 2008 ugly. We're not even close to that. The inventories aren't there. Nothing else is there. But in regards to the stocks, a lot of them are already trading rich to begin with, much less with a significant downturn coming. So for me, I'm staying totally away from all those type stocks. Honestly, I don't buy them anyways because I own physical real estate, so I have no reason to need more exposure in the stock market to real estate. But if I was looking to do that, I definitely may be looking somewhere else in the meantime. And the last stock we'll talk about today, and it's also going to have a massive impact and definitely be the most followed stock in 2023, and that would be Nikola. Just kidding, guys. Haha, caught some of you guys. I know I did. Come on, just admit it down in the comments if I caught you. But seriously, guys, it's Tesla, and I think everybody knows that. Now, I personally think Tesla is going to return wonderfully in 2023 from its current levels because, let's be honest, it's just beaten down stupid low for a lot of reasons that really have nothing to do fundamentally with Tesla itself. And I hear you guys. I heard it. Hey, there's no way it's getting to 300, much less all-time highs again, because there's so many other things working against it. Look at where it is now. Except for when it hit its June low, it basically, what was that, 215, 210, something like that. It rocketed back up over 300 just a couple of months later. Even during these types of markets, Tesla still has the ability to go on these epic sort of runs. Now, I agree, you watch my video up here on Tesla and we can discuss all the reasons why it's beaten down right now. But I think once we're past this Twitter drama, which will eventually end this year in 2023, Elon gets refocused, and we basically start seeing Tesla being one of the stocks that, once again, despite the fact that we had a recession this year and Tesla was, one of two best companies in terms of execution last year, if they continue to execute in 2023, and there's basically that, flight to more of a risk-on type market, you're going to see Tesla be one of the high flyers because it's just disproportionately beaten down. And I'm not sure there's any stock, especially mega cap-wise, that trades more on momentum and shoots up and down faster than Tesla does. But I would not be surprised at all to see it up over $300 by the end of the year next year. Maybe even more is possible with this stock because it's just that wild. And fundamentally, all the fundamentals look great. Now, we'll see if a lot of the Twitter damage and a lot of the noise around it is actually true. I don't think that it is. But again, we'll wait and see. We won't know until an earnings call, so I'm going to reserve judgment until then. But if we start seeing all the things lining up and Tesla continuing to execute, I see no reason why it can't get back to those levels. So again, if you want to see all my buys and sells on these stocks and other stocks, along with take 5 courses and actually learn how to do evaluation and create a plan for 2023, and jump in on the series that we're currently in right now in regards to your planning and your goal setting for next year that we're doing in the private group, make sure you check out the pinned comment and jump on the discount now before it goes away this weekend. And click this video here if you want to see what I'm buying during this downturn, and click here to see exactly what my plan is during this downturn. So thanks for watching, and we'll see you in the next one.